morning.
Good morning. How are
Thank you for being with us this morning.
Pleasure.
Yes. So I'm here at AFIFORUM 2020 and I'm interviewing Alicia Garcia Herrero for AFIF. And we're just going to do a quick recap of the keynote that you did this morning. So you just spoke at the opening keynote of the forum. All right, so can I just ask you to give a brief introduction of, you're here, and then how do you feel about the forum?
Well, first of all, this is a very interesting forum. I'm quite surprised to see so many investors of different nature. Of course, there's an interest in Asia, but I see many foreign investors, which means that this gives me an opportunity basically to talk about Asia from my perspective, not being Asian, to people who are not Asian, who are interested in Asia. So I think that is quite different from a little bit like the local view about Asia, because it puts Asia in a global perspective. And that's what I was trying to do at the forum.
Right, so your role is as the Chief Economist of Asia Pacific at NATIXIS Bank, right? And so you are actually really keen to put Asia on the radar for more investors. Everyone is concerned about the economic slowdown due to the US-China trade war, and I know that that's something you've really spoken out about, and that's a big topic for Asia right now, and it's impacting the rest of the globe. So where do you stand on that? Who do you think will benefit or lose out?
Yeah. So the trade war was the key topic for 2018-19, and we all heard and actually saw a phase one deal being reached in mid-January, so only a few days ago, which has pushed up the markets, equities in particular, since mid-December to record high levels in the case of the US, and very beneficial also for China and the rest of Asia. So that's where we stand off. The markets, we stand at a point where the markets bought into the phase one deal as the solution to all of their concerns. I happen to disagree with this view. I think the markets will start seeing that that deal reached was only about more imports from the US into China, which China might not be able to deliver. We already hear that the Japanese, the Europeans are all very worried about diversion of trade away from their markets into the US from China's point of view. And that's something that I think will come back to the discussion, let alone the fact that since the beginning of the year, we've also had a very important, we tend to forget this already, standoff between the US and Iran. And this is an obvious risk-off event, which was a risk-off event, but very brief, because Trump immediately reacted like, okay, sorry, I overdid it, no worries, we are in an election campaign. But we all know that behind Iran there is China. And this is why I always tell investors, this year it's not going to be about tariffs, which doesn't mean that US-China strategic competition will not continue, but it's going to move closer to sanctions, closer to Iran, closer to stuff that has nothing to do with the phase one deal, which will still keep the US banging on China. And markets having some sell-off situation in 2020. So I think we enjoyed the phase one deal. People made some money, they were invested, especially in US equities, but frankly speaking, that's not the end of the year. The end of the year might look very different. It won't be catastrophic because Trump has to try at least to win the elections in November. But the thing is, he cannot control his impulse to bash China on things that are not phase one related, because that gives him votes. Let's not forget that. So he will come with sanctions, he will come with stuff that doesn't deal with the phase one deal. And that will move markets quite aggressively. Yeah.
So who do you think will benefit in the short run and then in the long run?
So to me, if I were an investor, I would try, especially long run, but starting now, to look for markets that have their own domestic demand behind, that are independent. Unfortunately, the largest market is India, but India is in stagflation mode with high inflation and increasingly low growth, and quite expensive. So India, which would be the natural hedge, is at the current juncture a little bit shaky. So I would go Southeast Asia because, in a way, although there's been an improvement in yields, it's still cheaper than it was before 2018 hike in rates in the US. So it's still okay, and I would try to do that within Asia. Yeah.
So that's actually really interesting because I think in your presentation you mentioned about China's structural slowdown, and you also said that invention is not going to stop that.
Yes, so Chinese innovation is obviously very strong, and it's admirable that a country of the income per capita of China has managed to do what it has done. I mean, no, don't take me wrong, obviously. But at the end of the day, we need to look at the impact of innovation on growth, which is what, is the measurable impact at the macroeconomic level.
You mean GDP and things
Yes,
like that?
GDP growth.
Okay.
And so far, the impact of Chinese innovation in total factor productivity, which is the way we measure the impact of innovation on growth, is very small. And the reason is that not all of the innovation anywhere, this is true also in the US, productivity in the US is coming down. This is true for China too.
Yes.
Because the type of innovations, there's a huge book by Gordon, very, very interesting book on why digitalization and the type of innovation we're promoting today is less productive than the steam engine or other types of innovation. Why? Because it's not focusing on the manufacturing sector, which is the most productive sector. Long story short, I'm not saying it's not good, but I'm not saying don't expect China to stop structure, slow down, only thanks to innovation.
Right, so you were actually mentioning that offshoring to Southeast Asia is an important medium trend for the region. Do you mean in terms of manufacturing then?
Yes, so we already see manufacturing FDI, which is mainly in the region from Japan and South Korea, to a lesser extent, but also importantly Taiwan, is no longer going to China. So the manufacturing FDI going to China is shrinking, while manufacturing FDI into Southeast Asia is increasing very rapidly. Already, before the trade war became really sour, so already in 2018, total FDI into Southeast Asia, ASEAN, was bigger than total FDI into China. So, it's quite impressive.
Yes.
So I happen to believe that Southeast Asia, especially under ASEAN, which means RCEP, RCEP, this new free trade agreement, will become more regionally integrated. And that will give, already happening actually, the floor to many companies to operate, meaning produce manufacturing goods in Southeast Asia.
Okay.
Which also has the demand to buy these goods. So meaning I'm quite bullish basically on Southeast Asian underlying.
Good news for us. Is that part of the reason that you came to the forum?
Well, there's many reasons, but I really love Thailand, so it's a it's a great opportunity to be back here. And Thailand, let me tell you something, Thailand is a little bit different from other Southeast Asian economies because the Thai economy, or the Thailand's population is shrinking. So it's very different from the Philippines, from Indonesia, from Malaysia. So Thailand has some of these structural deceleration forces in the economy because the population is shrinking. But good news. The good news is that Thailand is small compared to China.
Right.
Thai may not like this idea, I'm not saying, but if needed, Thailand can increase its population because it's sitting in the Mekong region. You see what I mean? It's possible.
Right.
For China, it's impossible because the amount of people it would need to import, so immigration would be inconceivably high. So Thailand's aging is a solvable problem. China's aging is unsolvable. That's the difference. So and final thing, Thailand, after Vietnam, is the largest recipient of FDI from Japan, meaning although the population is shrinking, your capital is cheap because your interest rate is very low. So for capital-intensive manufacturing, such as autos, you are such a good option. So I'm saying that's why I'm positive. Although I know that for Thai, the rates are too low, the baht is too expensive. I mean, they worry. I understand that. But frankly speaking, you're still young overall, meaning to say you're in a young region. You're in the Mekong River. Yes. You're in the Mekong region, not the same as China.
Right.
So
it is a cradle of growth.
That's right.
Thanks for those comments. I really do appreciate that. And since seeing as this is the financial forum, especially finance for sustainability and impact, can you comment a little bit about the trends and takeaway points for the impact finance sector when it comes to global economic trends?
Coming from Europe, I can tell you that impact finance and of course green finance is going to be the driver of growth in the financial sector in Europe, and I think increasingly in Asia, because Asia is going to be hit. And in Thailand, you had floods already in 2014.
Yes,
so
2004.
Asia knows that Asia is tremendously sensitive and dependent on climate change, because the amount of population that can go underwater, it's just mind-bogglingly high. So my call is that you're going to look at impact finance very quickly, although this is especially a trend in developed economies and Europe being at the lead, and increasingly even Japan, but I think Europe, frankly speaking, leading this movement. I think Asia is going to take this on board very quickly. Well, green finance, China is massively high. But I think it's going to be taken for real. You see, basically, not only official green finance, but real impact finance, which we're missing in the region. And I think this is a great topic for the forum, because it's going to be the future of finance in Asia, no doubt about it.
So we could say that's quite timely for the forum to come here, right?
Indeed.
Because prior to this forum, there wasn't such an event in Asia, and that was why the organizers wanted to start it. That's what they told me.
It's a very good idea.
Thank you so very much.
Thank you.
We appreciate having you on camera.
Thank you so much. Thank you.